in news that has the ability to potentially change the shape of the coming federal election campaign, the Commonwealth Bank today said it expects the Reserve Bank to raise interest rates the month after the election is expected. In other words, in June this year. The bank's economists originally expected the RBA to lift the cash rate by 15 basis points in August. But the Commonwealth Bank also says the cash rate will jump to 1% by year's end, effectively 3 rate rises. So let's bring in here the man who made those forecasts today, the Commonwealth Bank's Head of Australian Economics, Gareth. Gareth, many thanks for your time. Just tell me the reasons as to why you've changed your forecast today.
Well, look, afternoon, Ross. Look, I'll start by saying it's not a radical change of view. We've just pulled the timing of the first rate hike forward by 2 months. But we've done that based on comments from the Governor, Reserve Bank Governor last week, where he said that the bank is looking for a couple more CPI prints before they decide to pull the rate hike trigger. And we think that they're looking for those 2 CPI prints in the context of what they're forecasting, which is for the trim mean or the underlying inflation rate in Australia to come in around 0.8% each quarter of Q1 and Q2. Now, we think that inflation is going to be a lot hotter than the Reserve Bank has forecast. We think somewhere around 1.25% for the trim mean in Q1 of this year. And therefore, we don't think the Reserve Bank will wait to see 2 more reads on inflation. We think the next inflation print will be so strong that it will really then just be a matter of seeing some upward pressure coming through on the wages side. And then the conditions the Reserve Bank has set themselves to raise the cash rate will be met. And then we think they start raising interest rates of June of this year.